From bringing the biggest lawsuit on fraud in crypto history to new rules for the stock market and climate regulations, the Securities and Exchange Commission will be remembered in 2022 for proposing landmark rules, but also for actions it did not take. The SEC proposed the biggest changes to rules for the U.S. stock market since the mid-2000s, prompted by the GameStop meme stock frenzy in 2021 that saw online brokerages and market makers struggle to handle huge volumes of stock trading. The new rules would change the relationships between brokerages that take investors' orders to buy or sell securities, high-speed traders that handle the orders, and stock exchanges. The aim? Create competition for investors' orders to lower prices while increasing oversight of market makers.
It's about driving greater competition, transparency, and efficiency in the marketplace. And we have a marketplace today that, depending upon the day, between a third and a half is not in what's called the lit markets, but is in the dark venues, dark pools, or just being purchased by wholesalers. So it's trying to consider recommendations to better level the playing field between these venues.
Meanwhile, more than a decade after Congress passed the Dodd-Frank Wall Street reform law, the SEC approved a rule to claw back executive compensation of companies that have had to materially correct financial statements. And in a first of its kind, the SEC proposed requirements for publicly traded companies to report information on greenhouse gas emissions and risks related to climate change. But a decision by the Supreme Court to curb Environmental Protection Agency's power to regulate greenhouse gas emissions has thrown into question whether the SEC could impose climate rules. Finally, 2022 was a year that saw major enforcement action from the SEC against crypto firms. But it was also void of new rules tailored to crypto, causing members of Congress, the crypto industry, and others to blame the SEC for the meltdown of crypto exchange FTX. The SEC has filed a lawsuit against FTX founder Sam Bankman-Fried for defrauding equity investors to conceal using customer funds to support his hedge fund, Alameda Research. When asked during a recent interview whether it was finally time to write rules tailored to regulate crypto, SEC Chair Gensler wouldn't say. Instead, he said existing securities laws are in effect and that the agency will enforce them. This year, the SEC levied a $100 million charge against BlockFi for failing to register its retail crypto lending product, a record fine against a crypto firm. The agency also fined Kim Kardashian for touting a crypto security on social media without disclosing she was paid to market it. Gensler's goal for 2023? Making crypto exchanges and lending platforms come into compliance.
They can do that appropriately, working with the SEC, or we can continue on the course with more enforcement actions, and I would have to say that the runway is getting shorter.
All right, let's bring in Yahoo Finance's Jennifer Schonberger now. Jen, so as we look ahead to 2023, what's sort of the biggest things on the SEC's docket?
Hey, good morning there, Julie. Crypto is going to be very closely watched in 2023. You saw Chair Gensler send a warning shot for more enforcement action. Certainly, they are suing FTX's founder, Sam Bankman-Fried. They are also going after other people close to him that were involved in management of that company. So we should expect to see perhaps more lawsuits coming out in that area as well. Most of the regulatory effort is not likely to be in rules that are tailored to crypto that are newly written, but rather through enforcement action, which is what Chair Gensler seems to be signaling.
Jen, thank you so much. I appreciate the look back at what was an interesting year for the SEC for sure.
It was a momentous year indeed, yes.
Yes, thanks, Jen.